Hello, everyone, and welcome to the Money Flow Weekly Market Newsletter Forecast and Review for February 20th, 2026. Now, the NASDAQ snapped a 5-week losing streak. Okay, the major averages bounced back a little to finish the period with modest gains. Now, the different indexes traded in a narrow range for most of the week, but that was enough for the Nasdaq to snap a 5-week losing streak. Now, here's how the major players wrapped up the week. Excuse me. The S&P 500 closed at 6,862. The Dow Jones closed at 49,394. The NASDAQ closed at 22,683, while the small cap Russell 3000 closed at 3,923. Now, in the commodities corner, while, while equities were bobbing and weaving, the hard stuff, aka gold and silver, the precious metals, had a field day. Gold is back in safe haven mode as geopolitical tensions with Iran simmer. Meanwhile, silver is the undisputed prom queen of the metals market right now, surging as investors bet on a rebound in industrial demand. Now, gold is closed at $5,150.18. It's up roughly 0.8% as it tests new monthly highs. Now, silver closed the week at $86.39. This is a monster move, up over 2%. And boy, silver is up over 170% year over year. So I congratulate you that are invested in silver for the past year. You are smiling all the way to the bank. Now, oil closed at $65.50 per barrel, backpedaling from recent highs as peace hopes in the Middle East trigger a 1.5 intraday slump. Now, the VIX, aka the fear gauge, it popped up over that 20 line, creeping back above that 20 line. So we'll wait, watch, and see. Usually that means more volatility, and the market tends to move in the inverse of the VIX. So if the VIX continues to climb higher, sleep with one eye open. So we're in that spot where we're being very cautious and watching the VIX as if it can continue to climb above that uh, 20 line threshold that we often reiterate here on the Money Flow market review and forecast, that if that VIX remains above 20, the market tends to move down. Oh, excuse me. Wow. Move down, and again, we'll sleep with one eye open and watch that. Now, Bitcoin continues to be in a downward spiral slope. It is in a definite uh, long-term downtrend, and it closed at 66,088. Now, for the leading sectors, the spotlight, who's leading the pack? Now, while tech has been the darling for so long, we are seeing fascinating broadening effect. Investors are starting to rotate, as we reiterated last week, rotate into sectors that offer a bit more stability and tangible growth in this late stage cycle. XLE, the energy sector. The energy continues to be a standout performer with the ongoing focus on infrastructure and geopolitical energy shifts. Now, the XLE has been a double-digit leader for the year. And also, a leading sector is the XME, the metals, and the mining, because why? The mining metals group are catching a serious bid as global growth, particularly in the UK and Japan, start to outpace the US economic expansion. The demand for industrial metals is proving to be a bright spot. And also, we got another leading sector that we highlighted last week and it continues to shine, is the XLU, or the utilities sector. Utilities are maintaining their role as a defensive anchor of your and my portfolios in times of tariff turbulence. The steady dividend yield and defensive nature of XLU remains a favorite for those who are looking to hedge against volatility. Now, for the week ahead, it's going to be all eyes on NVIDIA, the largest company in the world. The big one is coming. NVIDIA reports earnings on Wednesday in a market obsessed with AI memory, optimism, and trade barriers. Now, Jensen Huang's update will be the ultimate vibe check for the tech sector. Now, the forecast is to expect choppy with a chance of breakthroughs if the 15% tariffs hold. Now look for domestic manufacturing and energy to continue their lead. If NVIDIA earnings report knocks it out of the park, the NASDAQ might finally break its February funk. Now, this newsletter is prepared for client distribution and is not investment advice. It is for educational and informational purposes only. So let's go ahead and take a look at these charts for the various indices that we have mentioned. So we're going to go and look at, as we usually do, at our 1040. This represents the long-term trend of the market. Here's the S&P 500, and as you can see, we still have a green background here. Even though we've been falling week after week after week after week, we are still above this rising moving average. Now we see why we're just moving kind of sideways, because our confirming indicator here, the MACD, is in a negative posture. That's why we see this narrow range. We don't see this excelling weekly price increase as we saw back here when the MACD was in a positive configuration. So, as before stated, we're going to wait, watch, and see. We're sleeping with one eye open. There's a tight range here, and the S&P 500 seems to be slowing down a little bit. This is again a late stage cycle, a late cycle stage, however you want to call it. But we still have a green background, which means the long-term trend of the market is up. Right? We're not down yet. We see signs of downward pressure, but we are not down yet. So, take away from this that we are still invested in select sectors of the S&P 500. As before mentioned, it's going to be the utilities, the XME, the metals, and also the metals. And let's go back and see what the metals, and we are looking. Don't want to lose track here. And the metals and the energy, yes, definitely remaining in that energy sector. Also, we're going to look at the Dow Jones Industrial Average. As you can see, up, up, up. We have a green background. We have a long-term uptrend. Remember, long-term trends dominate. Short-term trends fluctuate. So we tend to follow the long-term trend, and we'll use the short-term trend, which is a daily or a half-a-day chart. Maybe we'll look at one of those before this session ends, and we can see how we are looking on the short term. And you will see that the weekly and the daily will differ at this particular time because the daily is a shorter term uh, reference, and but we base our dominance and our trust in the long-term trend. And here is a look at the NASDAQ right now. The NASDAQ composite, as you can see, has been coming down, 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 down uh, for weeks. And then last week it popped up a little bit. But however, you still see the chokehold, as we call it here at the Money Flow newsletter, uh, market review and forecast, because the confirming indicator is negative, giving you warning. Sleep with one eye open, as we saw that confirmation in the VIX as well. It is above that threshold of 20. This is now, we're going to go to the Russell, and we see the green background, which still gives us a indication of a bull market long term. Long-term trends dominate, short-term trends fluctuate. So for the moment, we are still in a long-term uptrend here on the small caps and also on the S&P 500. Look at it again, the Dow Jones Industrial, long-term uptrend. The NASDAQ, long-term uptrend, even though it's been coming down for about 4 or 5 weeks. And the Russell saw small cap 2000, and we also looked at the 3000. So let's now jump over and look at some of those commodities that we have mentioned in the beginning. In the beginning, pardon me, I'm just being a little crazy right now. So we want to look at our we want to look at here we go. Now this is the daily chart of the Dow Jones Industrial, and as you can see, we have formed here a what we call a bull stack. These are Fibonacci moving averages that are on top of each other, but however, the Dow seems to be penetrating a few of those moving averages, and that is why we're sleeping with one eye open right now. We're going to look at the VIX, and the VIX is a little bit choppy here, and as you can see, it has the support of what we call a SAR, a stop and reverse, and it is building a bull stack again, and that is positive for the VIX, because if it continues to rise, we're going to see the inverse effect on the major indices. Okay, and we're going to look at silver on a daily basis. You can see right now it beginning to advance. It's up right now at the moment of this recording. It's up 5%, $4.36. And we're going to look at gold real quick. As you can see, it's starting to advance a little bit more from its high of $5,626 and change. And we're going to look at the dollar. Our dollar is continuing to fall, and that is the reason why precious metals are continuing to advance. It is a inverse relationship, and we're going to look at oil. Where's my oil guy? I'll just go ahead and look at Bitcoin. There's no reason because Bitcoin has been in down, 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 down. So with that, we are going to, we looked at gold, we looked at silver, we looked at the dollar, we looked at S&P 500, we looked at all these things. We're going to look at oil real quick. And as soon as we get a pick, oh, here's oil. This is our daily. Oil has moved up a little bit, at $66.39. So with that, we want to say every day and every way we get better and better, every day and every way we grow more prosperous, successful, and